Good morning, you're watching Investment Insights. It's election day today, and I'd like to talk about the non-farm payrolls that occurred last night. And as much fuss as the market wants to make out of it, the same story occurs again and again and again. Jobs which aren't really jobs are being created. The non-farm payrolls read 169,000, and the consensus was about 180,000. So the markets were below expectation, and technically the market wants that. The market wants that because it means that the Fed won't taper. And for the 400 billionth time, the Fed won't taper. It doesn't matter what the market wants it to do. The American economy is hooked on stimulus, and like a heroin addiction, it gets used to it. So it needs more and more and more just to keep it going, just to keep it constant. So not only will the Fed not taper, but it will have to increase its purchases. It will have to increase its loose monetary policy. It will have to keep rates at zero until probably the year 10,000, the way that it's going now. There's no way that the Fed can raise rates without the whole economy and all the bubbles out there imploding. So you're talking about real estate that will explode in a nanosecond, the stock market that will disappear overnight, and especially the bond market that will just be the American default that I've been talking about for the past few months. So you've got a situation where non-realistic jobs are created. So in the description box I've put an article where they said that the majority of the jobs that were created were restaurant jobs and part-time retail jobs. And as I've always said, part-time jobs don't pay for full-time bills or mortgages, but that's what's happening in the States. And the reason why companies aren't hiring, or there's probably jobs out there, but companies are reluctant to hire because the government puts a high price on employment. Companies have to apply with the incoming Obamacare. They've got a lot of obligations that they've got to fulfill upon hiring people, and the costs are just too overwhelming. So people would rather underhire than even just hire to meet demand. And even that demand is questionable because the stimulus is like the circus coming to town. I've made a video on that, you guys can look it up. But you can't have a situation where an economy just hums along, or it just staggers along, and yet there's so much new money coming into the system and there's so many asset purchases. Now the problem with all these purchases is that soon the government won't have anything else to buy. I mean, it's buying 91 or 92% of all long-term treasuries right now. The Fed is buying $40 billion of mortgage-backed assets every month. I don't even think they're writing that many mortgages a month in the States. So the next big move might be to go into the corporate space, and the government might start buying up all the bonds, and that's going to lever up all the companies and set them up for the next implosion. but that's the subject of another video. Right now, the market closed about half an hour ago. You're looking at an S&P which has moved 0.07 points, which is, it just hasn't moved. The Dow's down about 14 points. Let's just say the market hasn't moved overall. The biggest movers initially was on the upside when the data first came out. The S&P was up 14-15 points on the futures, but it gave up all of that based on some Syria comments spelled out by the Russian President Putin, and then it just rallied over the next couple of hours, where it was up about 6 or 7 points on the S&P, and at the end of the day it gave that all up. Currencies actually moved against the US dollar. You've got the Aussie dollar almost at 92, you've got the pound up 50 points to 156.40 odd, and the euro moved about 70 basis points to 131.80. The thing is, all that is purely based on the belief that the Fed won't taper. And they're right. The Fed won't taper. But it shouldn't be buying all these assets in the first place. So anyway, to basically cut down on the length of this video, I'm just going to say the most important thing that traders out there have to remember is that the Fed not only will not taper, but it will increase its purchases. Or if it tries to do the right thing, and I mean try to do the right thing, and they tapered, the economy would straight away slam on the brakes and go into reverse. This will be evident within a month or two, not even a quarter. And the Fed will have to save face and chuck a huge turnaround and retract the tapering and in fact increase its purchases. We'll just see how things pan out over the next week whilst the market takes the weekend to digest this tapering discussion. And I don't really think that there's much to think about that one. It should be a no-brainer if you use common sense. Lastly, I really don't care who wins the election today. I'm not a political person, and the only thing that I like to talk about politics is that in a free democratic Western society, we have to vote. We are obligated to vote, and that to me is not a democratic freedom. That's just like conscription. You have to vote. I don't give a rat who's in government, because either way you're going to lose, or I should say either way I'm going to lose. So if I choose not to vote, that should be my right, but the policymakers decided that that's not the case. So I don't think that we live in a free society at all. Well, the polls open in about 2.5 hours. I'm just going to walk in there and draw a smiley happy face and just walk out. Who cares?